So, good morning, guys. This is RionFx. If this is the first time you're seeing me, or this is the first time you're attending Tea and Chat, you're welcome. Tea and Chat is it's a Monday event where we sit, talk, discuss, and shed light on things that are important to we as Forex traders, from technicalities to the fundamentals of trading Forex. If this is the first time you're getting to meet me or knowing me, I am a sentimental trader. I don't do just technical analysis. I play a lot with fundamentals as well. And welcome. You would gain a huge amount of value, and you would this tea and chat over time, I believe, is going to refine our charts. This is just the beginning. We hope to make it bigger and better. But until then, let's kick off with what we are talking about today. Okay, so today we have with us one of the most prolific trader in the industry when it comes to synthetic indices. So if you've never heard of it, well, today you're going to know what synthetic indices is all about. And she's going to be breaking it down for us, explaining it to us. And she's also going to be, showing us a few, things of her book of tricks and how she maneuvers her way around trading synthetic indices. We have no other person than the synthetic goddess herself with us here. Please put a round of applause, in the chat section. You could just put some clapping hands for her. Let's appreciate her and know that she is highly welcomed, and we are glad to have her in our presence today. But before we head on to that part of before we head on to that part of the call today, we're just going to do a quick outlook. I won't be giving so much details, but we would have our outlook session after the call. Okay, before New York session, I would have an outlook video sent to us for those of us that are in my channel. Okay, so I just want to do like a quick review. So I believe you can see my chart. Okay, so if you remember, we've been on GBP JPY. Presently I'm looking for an opportunity to continue going short, but I feel like I need a bit of a deep 50%, looking for possibly deeper liquidity resting ourselves. But if prices fails to, I'll be waiting to get I'm waiting to get to take out this 1 hour major common resistance. For instance, here continue to go short on the JPY. So if you're calculated, we're coming all the way for 185. Okay, to hold off a bit on the sales, then before we get maybe a major pullback to the upside. Okay, and that being said, we see the dollar take on this liquid zone here. Okay, so like they already played a manipulation on prices last night, create sweep out this liquid zone into this area here. And another thing we also want to take note of is we had previous hold as a good resistance level, and then when you come all the way as a resistance, acted as a support. Now we need likely chances that we might see prices come all the way back to 104 as we're expecting and we've predicted as well. So those are so on the XY, meaning that if that happens, we get some sales on Euro USD, the Euro USD to the up. I'm expecting to get this to then sell off to the downside. So playing it very simple. Yeah, I'm using laws of minor and major levels. Okay, so as you can see, we had this area of resistance. We had this range at 20,700. So I feel it's time 21,200 bullish to the up. Then we know that there's good. So we might see into this before we get prices. Most likely going to happen end of the day in prices. Chart section. Let me confirm that you cannot hear me. Okay, so yeah, that you can see area of support. Sorry, when I mean leave something on the charts, not my chart. Okay, the chart section on the Zoom, please. So I'm just going to clear that green space, okay? So yeah, so same thing on US 30, same outlook on US 30. We have this huge area of imbalance here, or inefficiency, whichever one you want to call it. And inefficiency basically is where there's just one party in the market, either purely buyers or purely sellers. Okay. So I'm also looking to see the sales, see prices come back to absorb the 41 point deeper a bit before we push to the upside as well. See how prices react at every level and give us good indications of wanting to move on. Euro USD since last week, I'm looking to see a return most likely to this area here, keeping this here for prices taken out of the trade, for prices to find this a possible, but we just have to wait as well. But we're already on this trade and we've been swinging it since last week. This morning, we're up 43 pips here, we're up 57 pips here. We presently are, at break even. Okay, so actually break even, but like this react, I'm still going to be safe because I'm just going to watch. Remember, Mondays are slow days, so we're not going to be doing so much until tomorrow. Okay, today we have the Euro CPI, which might also propagate the movement of prices to whatever level exactly that they want to get to. So we're just going to watch. So with that being said, let us head into the start of the day with our able guest. Okay, so I'm going to stop sharing at this point, and I want to call on our guest, um, synthetic goddess, the goddess of synthetic indices herself. Please, if you're on the call, could you unmute yourself and say something?
Hi, good morning, everybody.
Hi, good morning, synthetic goddess.
Morning, Ryan.
Hope you had a
Thank you
splendid
so
weekend.
much. Yes, I did. Thank you very much.
Thank you very,
Thank
very
you for
much.
having me here.
The pleasure is all ours, and we are so glad you were able to honor the invitation on such quick notice. Thank you so much for making our time. I know it's Monday and we have busy schedules to catch up with. So I don't know, would you be okay, turning on your camera? If you're not, it's actually fine. It's just so
Right. No, I'm just coming back from gym. I had to quickly go and come back. I had to rush back. So I'm just coming back from the gym
okay.
and
Okay, that's very, very understandable. I personally, I don't go to the gym in the morning or on Mondays because of tea and chat. So I usually go later, probably like around 12, 1. It's a good thing to say that we're all keeping healthy. That's something to emulate. So welcome, 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 synthetic goddess. It's been a while I touched the VIX as as a trading, should I call it a commodity or an instrument in the foreign exchange market. One of the things, yeah, one of the things that made me run away from VIX, I will get to talk about it later on. But thank you so much for joining. So as always, we have a few things that we do during these calls. Is we want to have a discussion with you. We want to ask you questions. We want to get more insight about these things from you. And the questions we're going to ask you are basically going to do three things. They are going to be they are going to be inquiries. Then they are going to be informative for us, and then they are going to be descriptive for us. So what we mean by this is we're going to ask you questions to just know about yourself and how you came about synthetic indices and why you've chosen to stick to that part. Then secondly, we're going to ask you questions that would allow you reveal some information to us to help us further understand synthetic indices. And then thirdly, is going to be descriptive in the sense that we would want you to shed some light on how you view the charts and how you go about probably what simple tricks you include in your charting system to help you, attain some level of profitability in trading these instruments. And that's about it. So we're going to go straight right into it. If for any point in time I have a reason to cut you in, please forgive my bad habits. It's just so that we could have a conversation. Okay. So thank you
all
so
right,
much for
that's
joining
fine.
again. Thank you so much for joining again. And we're just going to start out with you introducing yourself and give us a very, very brief intro about yourself in, at least about 3, 5 minutes, and then we could start out from there. Thank you.
Okay, thank you very much. Good morning, everybody. Thank you for joining the call. My name is Fikayomi Peace, and I am known as Synthetic Goddess. I finished in University of Kwara State University, political science to be precise. Our politics. So I finished as a political science student, and I am 26, trading just synthetic indices and a little touch of currency pair. And basically, I just got into synthetic indices just to, be totally different. I love to do things differently. And I got to notice that a lot of people go into currency pair when I started my, foreign exchange markets journey. I noticed a lot of people go into the aspects of currency pair, and I saw some untouched wealth in synthetic indices. I just had to, focus on it. This is my fifth year in trading synthetic indices. I'm 5 years in the journey right now. I started with synthetic indices. Along the way, I am still trading currency pair just once in a while, but basically my focus is on synthetic indices. I think that is just all about me.
Okay, thank you so much, Synthetic Goddess. Thank you. I feel like I want to start calling you by your name right now because I actually like the name. I had a friend in school then. His name was Fikayo. I don't know if that was the full thing, but we used to call him Fikayo in school then. So thank you very much. Synthetic Goddess, if you're on your laptop, I don't know if you're on your laptop, but if you are, you can please share your screen.
Okay,
Okay, so
that's
we
fine.
can have yeah, so we can have a screen on display on the call as well. So while you're doing that, the first question for us is what exactly is synthetic trading and how does it really differ from the traditional forex trading? Like what are the similarities and what are the differences and what exactly is synthetic indices all about?
All right. Basically, synthetic indices is just like a replicate of the currency of the normal markets, of the currency pair market, stocks market. It is just like a replicate. It is not the real, you know, it is not the real market. It is
Okay.
just like a replicate with mathematical calculations.
Okay.
That is what synthetic is. So now the difference between synthetic and currency pair or the normal market is that synthetic indices runs 24 hours and 7 days. Then secondly, it is highly volatile. That is the volatility market. Also, when we talk about synthetic indices, one thing I want you guys to know is that anybody can come up with synthetic indices. The only one that is popularly known right now is that of the reef. I
Mm,
can stand on my own and say I want to create synthetic indices just to replicate what the currency pair market is doing. I can
mm,
decide to do that because it is just something that you replicate from the normal market and you put it in a database, you do all those things, you do those software, and then you bring it to life.
mm,
And if you guys remember, or if you've been in the Forex market for a year or two now, you remember there was a time some people came up with dump 200, all those assets. That is also synthetic indices. But the one that is highly recognized is this of the reef.
mm.
And also another difference of synthetic indices and currency markets is that they can decide to, add any asset at any time.
Okay.
They can decide to add any asset at any time. In the normal currency pair market, you can't just decide to add anything at any time. It is money that is traded, just fiat money. We have digital money traded on currency pair, but for synthetic indices, it is on board. Like they put mathematical calculations so they can come up with any asset at any time and just put it on board, unlike currency pair markets. I feel that is just the major difference of currency pair and synthetic indices.
Sorry, don't mind me. I keep muting my mic so I don't get any sort of disturbances into when you're talking. So thank you very much for that answer. I feel like you've made it as simple as possible because I used to trade synthetic indices. I'm not even going to lie. One of my first major funds was from synthetic indices. I'm not going to lie, it was from synthetic indices. I think that was in 2020, late 2020, after I was trading currencies, then I found No, I knew about synthetic indices in 2019 when VIX 75 was like the main thing then. Everybody was trading it then. I used to have a friend and I feel he's going to watch this video and he's going to laugh. We used to call him Costas Chan. That was his avatar name that he formed, and he was giving VIX 75 signals back to back. I'm still sure a lot of people don't know who he is, but everybody knows him. And he used to call VIX 75 signals for us then, and we'll trade and we'll make some profit. I made a lot of money from VIX 75. I think as at that time, I racked over 6,000 USD on VIX as at late 2020, trading just VIX 75 and VIX 50. Those were the only things I was trading then. And over time, there was something I noticed that due to the fact that the market was um was broker generated, meaning that the whole essence of it being synthetic is that it's broker generated. It is a reflection of sort of like the volatility, like she said, of currency pairs shown on a different market and runs 247. I realized that I started to see a lot of manipulations and will I say changes in how the market was moving. It wasn't moving as though the normal things were working for the market any longer. Like my bricks and retest were failing and all of those things started failing. And that was how I gradually started to lose more money as time went by. I also did try to trade it in 2021 and same thing was happening. And at times I would get it right, at times I wouldn't get it right. So I stopped for a while and not until 2023 before I gave you a shot again because I had better understanding of, institutional market pricing and everything. But now that brings me to my next question, okay? It's easy for people to want to transition, but what would you say are the key factors that should be of consideration by any trader at any point in time that wants to dive into trading synthetic indices?
Okay. Um, as a trader that wants to dive into synthetic indices, the number one question you need to ask yourself is, what is your personality? You need to know what your personality is in the sense that now in currency pair market, we have a stop time, which is Saturdays and Sundays. But on the synthetic markets, we don't have a stop time. It is 24 hours and 7 days. The only time you will see the reef go off is when they are running their, upgrade or anything. That is when you see them go off. And the charts will definitely not go off. You will still see the charts moving, but there will just be a little glitch. And of course, they are going to, notify you before time. So first thing you want to ask yourself is, what is your personality? What kind of a person are you? Are you somebody that you stay on chat all day? If you stay on chat all day, you'll be obsessed with synthetic indices. Now you need to, stay off a bit. Let me put it that way. Because synthetic indices can be kind of addictive because of the 24/7 market. It can be a little bit addictive. So you need to know your kind of personality and you need to know what you can tolerate. Are you somebody that, you can just leave the market and let it run in whatever case, and whatever the market case is? If it is moving against you, you still can leave the market. You need to get to know your personality first. That is the first thing. The second thing that would help you, or the second thing that you should consider if you want to go into the synthetic market, the second thing I'm going to advise that you consider is currency, the knowledge you have in currency pair, can you replicate it on synthetic indices? I would advise that you go for backtest first, because just like I said earlier, synthetic indices is a replicate. It's like a mimic. Let me put it that way.
Sorry,
It's like,
sorry, are you the one sharing your screen or your phone
yes.
screen?
No, 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 no. I'm not sharing my phone screen. I'm sharing my system.
Please, whoever is sharing their phone screen, please, can you?
Is it better now?
Don't worry, I've made it to. You can share your screen now, please. It was
Okay.
actually a multiple participants, so that was what allowed that person to share their screen. So you could go back to share your screen.
Is the screen visible now?
Yeah, it is. It is visible. Thank you. Please go on.
All right. So just like I made mention earlier that synthetic indices is a mimic of the normal market. So now the same thing that works on currency pair markets, you might see a little bit of tweak when it comes to synthetic indices. We've seen a lot of currency pair traders that just come into synthetic market and they just feel that the same thing that they use on, you know, currency pair, they can just come and use it here, and they failed woefully. So there is a little bit of tweak there. So if you are just coming from currency pair and you want to go into synthetic indices, you need to refine your strategy. You need to see what works as part of your strategy. It's a mimic. Some of it will still work and some will totally fail. So you need to be able to backtest to see if this really works on synthetic indices or not. Then another thing that will help you transition as a currency pair trader into synthetic markets is if you are comfortable with the volatility of the market. Let's take crash and boom, for instance. You can't compare crash and boom with pairs like Euro USD, GBP USD. You cannot compare both of them because just one drop of crash 500, your account is gone.
Mm.
So you need to be able to know how to get comfortable with volatility. For instance, somebody trading gold on currency pair, it's going to be very easy for you to, get yourself together with the volatility of the synthetic indices market. But somebody that is trading less volatile assets on currency pair and you just want to come into synthetic indices, you have to get comfortable with the volatility. You have to get a lot of knowledge when it comes to the volatility of the market. Then another thing I'm going to, advise anybody that wants to transition from currency pair to synthetic indices. Now, currency pair has fixed lot size. It has fixed lot size. You say 0.01, that's low lot size, that's mini lot. One lot size is the standard lot size, right? I think that's how you guys say it. One is the standard lot size. Now on synthetic indices, each asset, like one by one, has its own lot size, has its own lowest lot size. You cannot use volatility 25 lot size to compare volatility 50 lot size. So when it comes to you transitioning from currency pair to synthetic indices, I am really, really going to advise that you get knowledge about synthetic indices because there's a little bit difference. There's a little bit difference. What I've said so far, number one, get to know your personality. Don't just transition from a market to another just because you wish to, just because you want to make money. One thing people do not know is that if you cannot make money on currency pair and you just want to jump into another market just like that, you will not make money too. And the reason is because you are not facing the real problem. You are not looking inward. You don't really know who you are. You just want to jump from one to the other. If that is the kind of person you are, you would come to synthetic indices and you will fail. So first, you need to get to know your personality. Which kind of person are you, or what kind of person are you? What can you tolerate? How patient can you be? Like, what are the things that you can endure? Do you know anything about the volatility of the market? Secondly, you need to get the knowledge. You need to backtest and see if what you are using on currency pair is the same thing that would happen or is the same thing that works on synthetic indices. Don't just come and fund your money and then you feel, oh, I'm going to use the knowledge on currency pair for synthetic indices. That's the second thing that you need to consider when it comes to you transitioning from currency pair to synthetic indices. I think those are the two major things that I'm going to advise anybody transitioning from currency to synthetic.
Okay. Thank you very, very much. Synthetic in goddess. See, I want to call it synthetic indices itself. But the transitioning is a big term to use. So just a quick yes or no answer. Do you think it's possible to trade both of them? Because back then what I used to do was trade currency, during the week and then trade synthetic during the weekends. Or when you're starting out now, there's this fire that is always burning under you. You want to trade everything, and so I would trade currency during the daytime, and then in the middle of the night, I would, you break that discipline and you sneak in. You want to go and trade VIX, then it will flog you. Then you go and sleep peacefully, and wake up in the morning, and then you realize that it will affect your currency trading in the morning because you're waking up now with the vex and anger that you've lost money over the night when you could
Yeah.
have just slept. You
Mm-hmm.
get. So, like, I feel
Yes.
like those were some of the mistakes I personally made on the VIX side. And I'm not going to lie, I was trading VIX with a crazy friend of mine. I mean, we've we're doing minus 500. Like, we're blowing accounts in a
Yes.
day trading VIX. Like, we'll load money and it has disappeared kind of thing. And like you said, if you don't know yourself, you would find it difficult to trade VIX because VIX, for me personally, tested my patience as a, like, imagine you entering a trade and it's ranging for 12 hours before it moves. And I'm not going to lie to you, synthetic brothers, I've sat in a range on VIX for 3 days.
I,
I was in a range for 3 days, and they made sure that they absorbed and swept every possible. You know what? Let's not even talk about that. That's too deep right now for them to understand. Before we start speaking in huge terms, but that also is going to lead me to my next question. Exactly, yeah, is considering the fact that it is a broker controlled market, it's a broker generated market, yeah.
yeah.
And one, be sure of managing their risks and be sure that the broker isn't always going to hedge against them and they can actually make money from this thing, because sometimes it was looking like gamble to me. It all felt like I was gambling because it's like, if there's somebody at the back end that has generated this market, it simply means that they know for a certain where every pitfall is and they can set me up for it. So how
Mm-hmm.
then can you say you can fully manage your risk trading synthetic indices?
Okay. The first question was, is it possible to, you know, trade the two together?
Yeah.
It is actually possible. Okay.
Okay.
Possible, but not for beginners. Let me put it that way. If you are just a beginner and you are trading the two markets, in
Yeah.
fact, you will fail. You will outrightly fail. You need to focus on one. So as a beginner, I'm definitely not going to advise that you trade the two together. When I started in 2020. I started with synthetic indices, and it was just in 2023 or 2024, I think 2023 ending or beginning of 2024, that I started, looking into currency pair. It is possible to trade the two together if you know what you are doing.
Okay.
But if you don't know what you are doing and you are a beginner, it is not possible. Then the second question, which is the risk management and all of that. Now, how you can be sure you manage your risk perfectly? First, you need to get a working strategy. In
Mm-hmm.
fact, that's the main thing about synthetic indices. You see ICT, SMC, retail trading, you will need tweak for it to work on currency pair.
Mm.
Not all of it works just like that on currency or on synthetic markets. Sorry. You know that ICT was generated with currency pair market. I've not really seen anybody that really generates strategy from synthetic indices, and you know it's what everybody is watching now. I've not really seen that. Most of the strategy you will see out there were generated with currency pair. So first you need to backtest and get a working strategy before we even talk about risk. Then secondly, when it comes to your risk management, you have to go for low volatile assets. Do you know that I'm 5 years in the game right now and I still trade low volatile assets? Some people thinks I don't know how to trade the high volatile. I don't mind what anybody thinks. But when it comes to low volatile assets, you are able to control your risk than high volatile assets. There's a classification. We have the medium volatile. None of it is low now. before in 2022, 2023, if you trade on volatility 75 1s, it is the lowest volatile asset that you can see in the market as at that time. But right now, it is now medium volatile because they changed the lowest lot size to, a particular lot size now. They increased it. Yes, they increased it. They increased the lowest lot size. So right now, it is no longer a low volatile asset. It is a medium volatile assets. Now, you need to be able to differentiate between your low volatile asset and your high volatile asset. If you are not concerned about your risk and you don't want to gamble, you need to go for the medium volatile asset so that you will be able to control your risk and you will be able to put your stop loss in a very reasonable place, and you know that it is not going to hurt your account. So first, you need to differentiate your low volatile, your medium volatile. We don't have low now. Your medium volatile asset and your high volatile asset. An instance is volatility 25 right now is medium volatile asset. But you dare not go to volatility 51s and do the same thing you do on volatility 25 there. It's not possible. So if you are not concerned about gambling or you want to make quick money, work on medium volatile assets. You will be able to control your risk. You will be able to control your lot size. That's one thing I love about it. If you are risking high, you know that you are increasing your lot size. Okay? You just want to increase your lot size. There's also another way that you can hack lot size on synthetic indices, whereby the lowest lot size, you are going to hack it to reduce a little bit. There are ways you can do that. But for you to be able to control your risk and be able to manage it properly, you are definitely going to love medium volatile assets. It gives you that control. It gives you that, power. Let me put it that way. It gives you that power to be able to control whatever you want from the market. If you want to lose small, you put your lowest lot size. If you have a particular percentage you want to risk, you increase your lot size a bit. So I feel that is just how you can control your risk when it comes to synthetic indices. Get a strategy, a working strategy, then go for low, medium volatile assets.
Thank you very, very much for that answer. You see this thing you're saying, yeah? If not the way you're explaining it, I really wouldn't know how to explain it to another person. I remember there was a time I was even struggling to calculate lot sizes on volatility indexes. Like it was a struggle for me because if you use the same lot size, on a pair like, so there are some of the pairs that have like similar lot sizes, but their movement is chaotic. I remember then volatility 10 used to be like one of the slowest pairs that you can trade and wouldn't take much from you. Then another very slow pair, I think for me was V25. But I think now V25, like you said, is now medium volatility as well. Thank you very much, Synthetic, for that um for that answer and how you've been able to break it down. So please, Synthetic, just give me a minute and we'll get back. Let's take a quick commercial on that. So what's up, guys? If you're still watching, this is my YouTube channel. You can see we have every of the previous tea and charts that we've had so far. We've had Joanna, who's a very fantastic gold trader, and we had AG, who is a very good fundamentalist with a degree in accounting and economics as well. We've had Tony Sniper on the call as well. So you might want to check out each of these tea and chat episodes so you could learn something from each of them. We've spoken about fundamentals. We've talked about one of the major problems to Forex trader, which is analysis paralysis. Okay. We've also had a call with the ICT queen herself, Temi herself, where we spoke about different strategies and how to go about implementing them with different trading systems. And you also have the last year and chat episodes with me, which was episode 5 about 13 days ago, where we were talking about how to use fundamentals to actually plot out sentimental analysis on your trades. So just in case you're wondering how you could gain access to this, all you have to do is look into the chat section on the Zoom right now. I've dropped a link for you to click follow, like, subscribe, leave a comment about what you want to learn next, who you feel I should invite, and we'll look at each and every one of those comments and suggestions and make them a reality and make them possible. Remember, this is all about who is joining, and we're bringing the best to each and every one of us. So let's get back to the call at the and continue from where we stopped. So I just stopped sharing my screen. So I believe Synthetic Goddess, you can go ahead and share your screen now. Thank you very, 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 very much. Okay, so Synthetic, so I have a question. Yeah. Do you feel that during that transitioning process where someone is trying to move to okay, you know what we're going to do? Let's put it this way, Synthetic Goddess. I want you to talk about a particular system that you used in your early times while trying to trade synthetic indices, and how you went about it successfully, and what your experience was like in that first period. But whilst you're doing that, can you do a walk on your chart of this is V25 right now? So while you're telling us about your experiences and indices, you can do a walk on your chart. Let's just watch how you're analyzing the charts, okay, while you're telling us your experience and we're having that conversation. And then when you're done, analyzing the charts and, just in a very simple way, nothing too much. No, you don't have to give us too much details. We know these things, we have to pay for them, but just the little one that you can share to us for free. Outside people call it Kyota, Nasadaka for free, just give it to us and let us see how you do it and you plot it. So you're basically telling us your experiences, what particular system you used back then and how it has been so far growing from year one all the way to year five. Thank you very, very much, Synthetic Goddess.
All right. You and synthetic indices.
I don't nearly call you synthetic indices like 10 times now.
All right. That's fine. Now, about my experience basically in the synthetic market, I remember the person that mentored me first started with synthetic indices for me, apparently. And basically what I just learned from that class was how to identify my order flow and market structure, and how to identify the origin of the market coming back to the origin. Like, I cannot forget that because I still use that up till date. Now, at the point it was really, really, really working. That is that my order flow, just identifying the order flow and market coming back to the area of origin. But it got to a point where market stopped coming to the area of origin. You just see market get to a particular place and then it just stops. It will not come back to the area of origin. And it was at that point I was doing my chart intimacy. It's really crazy because a lot of traders cannot do that today. Sometimes I'll spend 8 hours on my chart just looking at what market has done in the past. That's what I call my chart intimacy. And that was when I formed that name, chart intimacy. So then I was looking at what market was literally doing. I'm going to spend hours on chart, 8 hours on chart, at least 3 times in a week. And I got to discover that market not coming back to the area of origin. We have what we call the interest candle coupled with fair value gap. We have the area where we call we have what we call the fair value gap. We have an area we call fair value gap. If you are into trading, you definitely know fair value gap and interest candle. And as at that point, it works with order flow. There's nothing you want to do. It has to come in alignment with the order flow. You just have to do it in alignment with the order flow of the market. What market is, where market is trending to. And when I got that, it was in 2020, I think 2022. That was in 2022, okay? That was when I got that interest candle and fair value gap. And I was using it. It was really, really amazing and it was going fine. It got to a stage it stopped working. And that is why you definitely need to be refining your strategy. No matter what, you have to refine your strategy. At least if you are not doing anything in 3 months, pick out some days that you're going to look at what the market is doing, what has changed in the market, and relate it with what you are currently using. But unfortunately, a lot of us cannot do that. In fact, I made that mistake also when I started up. I did not have a stable strategy. I just look at the chart and then I just know that this is what I'm looking for. I did not write it down. I didn't write it down as at then. So when the market changed, it was not so easy for me to get what I was using before. I was just racking my head and I'm like, okay, so what exactly was I using before that was really working? It will get to a stage whereby you are going to face losing streak, and that losing streak is going to take your mind away. It's going to take everything you have in your head away. And that is why it is really compulsory. I'm going to advise every trader to do this. Get a journal that you write every damn thing on. Write everything you see in the markets. In fact, even if you think it's the craziest thing, write it down. Because you will get to a stage where you will lose your mind because of losing streak. Everybody will face it. Everybody go chop breakfast. So you will face it. I faced it. Sometimes I face it right now. So it gets to a point you face losing streak. You have to, go back to what you were using before. So what I am saying is that sometimes markets will change. It will change from what you are using previously. And if you don't know what you are using previously, you will not be able to align it with what is currently happening in the market. Hold on, please. So we have, let me write this, areas where we expect market to break to confirm us that we're in a downtrend. Expect market to break. Now, what I am doing on chart right now has to do with the order flow of the markets, the movements of the markets, the market structure. If you don't know anything, if you know the market structure perfectly, trust me, whatever you're going to be adding to it is just going to be an addition. It's just going to be you refining your strategy, but ensure that you understand what the market structure is all about. So, as I was saying, it got to that point I was using just interest candle and fair value gap. I was just using that and it was working perfectly, but it worked for like 6 months and it stopped working again. And I faced this huge losing streak. It is always the losing streak that brings me back in time that this thing that you are looking at, this thing that you are using, it is not working again. But some of you, like some people, let me put it that way. I don't want to attack you guys that is here. Some traders, when they face losing streak, they blame it on the market. They don't look at what they are doing wrong. They don't look at their strategy. They don't look at what exactly that they are doing wrong. Okay. They just want to focus on the market that, oh, the river started their manipulation. Oh, this has happened. This has happened. They avoid taking responsibility that, oh, it seems this strategy is not working again. So when my interest candle and fair value gap in alignment stopped working, I transitioned into watching different SMC candle. Now, when I started, let me just give you a backstory. When I started trading personally, I can't really say I have a stable mentor. And that affected me a whole lot because I was just doing what was in my head for 3 years. But I was, looking at the charts. I was consistently studying the charts. But not having a mentor made me, made my journey really long. It made my journey really long because I was the one trying to figure everything out. I was the one trying to figure everything out. So when I started, I didn't start with the basics because I did not really get a mentor. What I got was that I just paid for an intermediate class and that was it. And the person that taught me then taught me what I made mention earlier. It taught me about market structure and going back to origin. I didn't start with the total basic. In fact, as of 2023, three ending. I didn't know what it means by trend line liquidity. I did not know about it. When you start saying this thing can do, I did not really know about it. But when it comes to market structure, just call me. In fact, till now, my partner is always saying that you are super good at market structure. Just look out for market structure. I'm going to, analyze the rest. When it comes to market structure, I am really good at that. And I'm going to advise that if you don't even study anything, ensure that you know the directional bias of the market on different time frame. So when I, stopped using my interest candle and fair value gap in 2022 or 2023 beginning, I looked into watching different SMC videos. I started watching different SMC videos and I was able to bring out those time frame alignments. There's something we call time frame alignment. And I noticed I am an intraday trader. I trade intraday. So, I got into time frame alignment and I remember this particular video. I can't really remember the name. I remember a particular video that I watched that talked about time frame alignment and all of that. So I started using the time frame alignment, aligning my market structure together, and it worked. I mean, it's really, really worked. And it got to a stage I got tired of that because I wasn't really getting the result I want. Sometimes in a week, I might just take 2 trades. And that was it. But I'm an intraday trader. So it works perfectly for swing. So I refined my strategy again as at that point, and I started using all time frame. And this was in 2024. I started using all time frame. You see, when people tell you that use just this specific time frame, I feel they lie to you. Sometimes you need to go on other time frame and look at what the market is doing. Don't just focus on a specific time frame and you are just addicted to that particular time frame. Sometimes what you are looking at on that particular time frame will not work for you. You will need to get it on higher time frame or on some other time frame that you don't even want to look at. So personally, I started using all time frame, like all time frame. When I mark out a particular point of interest, right now I use point of interest and entry confirmation. And my slogan is always that a point of interest is just a reaction zone until there's an entry confirmation. So let me mark out a point of interest here, just, because of what I am saying. This is a point of interest for me here. So I started using point of interest and entry confirmation. So when I mark out a point of interest, I look at all time frame. When I talk about time frame, it is not that I'm going to be looking at one. No, 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 no. When I talk about those major time frame, we are talking about the weekly, the daily, the 4 hours time frame. Sometimes I transition to 8 hours time frame just to look at what the market is doing. Now, you need to know that all these candles, when they form on different time frame and they are going to form in different patterns. If you are not seeing your pattern on a particular time frame, you can definitely see it on another time frame. So I have a pattern in my head. For instance, let me just show one of the patterns. Let me just show it just in case you want to use it. But if you don't understand it, I'm sorry, it's not going to work for you. So sometimes I just look out for this pattern. I wait for market to come back here. Then I make that movement to the downside. I look for an entry confirmation to, join up. Now, what I am currently using or what I started using from 2023 ending to 2025 is now pattern coupled with different time frame. If you are having any issue with entry confirmation or entry, if your issue is basically with entry, because I faced that issue too. I was good at everything I was doing except for entry. I faced that particular issue. I was good at everything, and I noticed that 70% of traders are also facing that issue. They will be good at every other thing, market structure, liquidity. Talk about liquidity, they are really good at it. But when it comes to their entry, it's either they are making late entry or they are entering early. So I had issues with my entry as well. Now, if you're having issues with your entry, try this trick of time frames. Just look at time frames to confirm your point of interest and your entry confirmation. Just look at different time frame. Now, I'm not saying that you should just box everything up in your head. What I am saying is that you're not going to be using more than 4 time frame, but you need to see what each of those time frames are doing. Is it in alignment with your structure? Is it in alignment with the pattern you want to trade? So I have a pattern. I have patterns. Let me put it that way. I have patterns that I trade. And when I look at a particular time frame and I'm not seeing that pattern, I will see if another time frame has, giving me that pattern. And once I see that that time frame has given me pattern, that's the time frame I am going to use for my continuation or for my trade. So this is a particular pattern that I love using also. So when I see it on chart, I just look at different time frame and that is it for me. So I boxed up every topics in my head. Market structure, talk about market structure, talk about liquidity, talk about point of interest. I boxed those 3 things into patterns. I was able to come up with patterns on my own in my head. I was able to come up with them and I've seen them work over and over again in the markets. I back tested it, I forward test it, and I've seen it work over time. But if I'm not seeing it on a particular time frame, I don't force the trade. I just look at other time frame and see if it is just for me or not. So this is my analysis for volatility 25. We are currently in a bullish trend. This is a break of structure to the upside, and this is the PO high that I am currently looking at because for market to use because of this fair value gap. I still use fair value gap till date because it works. It works especially for confirming my point of interest. So this is a fair value gap. I'm expecting market to come back to my point of interest and give me an entry confirmation. And the funny thing that I'm seeing here is that we had impulse to the upside. This is the area of origin, okay? We have this momentum to the upside. There's an impulse to the upside. We had that crazy move to the upside. One crazy thing about this market is that we might not come back to the area of origin here because of this impulse. Just because of this impulse. So I can go to my 8 hours time frame. Remember, I was talking about, using your entry and all of that. So another area where I know that market could use is here. But I'm not going to assume. I'm just going to mark out this my point of interest. This my point of interest is valid to the fact that we had a manipulation to the left-hand side here. We had a manipulation to the left-hand side here. The way I make my analysis is very simple. Just get my break of structure, get those valid area for liquidity. I've seen a lot of liquidity here. There are a lot of liquidity that I've seen here. Then I mark out my point of interest. I mark out the low I'm not expecting market to break. And that is where I'm going to put my stop loss. I'm going to look out for areas I'm expecting market to break. That's where my take profit is going to be. So I feel that's just it for me. And for volatility 25, this is my current lookout for volatility 25. You can see that I just marked it and it was really easy. It was super easy. And you can do it also. Ryan, I'm here. I'm done. I feel that's just it for me.
Thank you very much, synthetic goddess, the goddess herself. I was just paying attention to everything you were doing because to me now it's like, okay, this thing is something that I should be able to know. But I feel like you said, is in fact, not even you said, we know, you and I know that this game is highly mental. And I feel for me now at this point with synthetic indices, yeah, is I need to get a couple of wins again. I need to get 1, 2, 3 wins just to kind of build my confidence back again. I took a trade presently. If you could just help me open your chart and go to crash 500.
Okay.
Me, I'm a swing trader, and that brings me to a question I was about to ask you. Would you say that we have about 10 minutes left? Would you say that you are in fact a swing trader or a day trader when it comes
I,
to synthetic indices?
I think I made mention of it, right? I'm an intraday trader, intraday, not even daily. I don't like holding my trade even till the next day. I
Uh,
don't.
that means I'm your senior brother in that case. So just kindly reset your chart, open your chart, just right click and reset the chart for me. I want to say it like on a wider. So yes, so if there's anybody here and you're on my Twitter, if you don't have me on Twitter, just quickly pick up your phone. It is underscore Ryan underscore INC Inc. as in incorporated, short for incorporated. You would clearly see that I sent out this analysis, and my analysis are like very clean and easy. So first things first, I synthetic goddess, if you'd allow me, I've I've gotten to a point where these days I just like to play with prices rather than even lines on the chart. You would see that this market was trending all the way from from January, from that upside, that very top. You see that prices was trading from that very top there as at January, the start of January. And then when you look closer, that was January, is that January 25? Yeah. You would see that we were in a downtrend up
January,
until,
January 7th.
yeah, you see that we were in a downtrend up until the 17th of February, where we initiated a double bottom scenario just at that point. Now, when we initiated that double bottom scenario, we could see prices clearly break above the neckline of that double bottom. And not only did it break there, we had a previous break of structure, of a higher time frame structure, probably the daily structure, by the other side of the chart where we had that low before the low I'm talking about presently. That was in 2024, in December of 2024, where that low was created. Yes, exactly, that low. So that was where we had the break of structure of the higher time frame. Now, since we have a break of structure of the higher time frame, it is expected that we would have a what would have a what I call a pull phase. So the market basically for me in structure wise is directed into two phases, a push phase and a pull phase. A push phase is when market is moving to the direction of which the market is supposed to be, and that was bearish. Now we need to get a pullback. So that is the retracement. So now we are in a pull phase. Now, what signified that pull phase for me was that double bottom. And where that double bottom formed again, if you look to your far left, synthetic goddess, you would see that we are coming from a point of fair value. Yes, you just need to, when you go back all the way here, exactly, you see the fair value. You see
Okay.
that
Yeah.
that double bottom was coming from an area of fair value. Now, automatically, I saw that, and in my head, I'm like, you know what? I can clearly see the first touch and that wick of the second leg of the double bottom had manipulated the first low. So the next thing I was looking for was, you know what? We need to see prices move to the upside. So all I simply did was draw my trend line. I saw the breakout of my trend line. I saw prices coming to retest my trend line, and boom, there you have it. We are moving to the upside. And I'm expecting prices to stop no other place than 4,360, 380 level. You can go back and watch this video by the end of next month and tell me exactly where prices are. And this is also on my Twitter, and I tweeted it. How do I put it? I didn't force the trade, but I am using it as an entry level admission for myself back into synthetic. And if this trade works out as well and as I expected to, then you guys should fear my return on volatility indices. I'm going to come back and make money from this thing because there's a lot of money to be made on it. So yeah,
Exactly.
my reason for that level is you can clearly see the liquidity points or liquidity zones just before that level, and it serves as a very good supply level considering the fact that we are still very much bearish, and I'm expecting that bearishness to continue eventually. But until then, let's see how it plays out. So I
Okay.
see. Thank you
Let's see.
very, very much, Synthetic Goddess. I cannot, you know, thank you enough for, making out time under such, quick notice. I mean, I came to your DM, was it on Thursday? Was it on Thursday?
I
And
do have a question.
okay, yeah, I see your hands up. We're going to get to that point where we're going to ask questions quickly. So yeah, if you have a question to ask, you can leave it in the chat section, or you could just raise up your hand. Okay, so okay, so someone says they have a question. Okay, is that Samson or Lee? Which of you would want to go first?
Okay, good morning.
Good morning.
Yeah, this is Lee. Thank you for the privilege. Um, 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 the lady that just spoke right now, I kind of forgot her name. Her name just skipped off.
Synthetic goddess.
Yes, 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 yes. So she made mention about a good information because I do trade synthetic.
Okay.
And she said something like those less volatile pairs are now volatile, not like before again.
Yeah.
So due to us that trades those pairs due to capital and the rest, please,
Mm.
is there a way we can get a list of, like, to be informed, because the list of volatile pairs are not, it's not updated. I just got this information right now, so I
Okay.
can also share with people. It's a good information, and due to some people who thinks that those pairs are still less volatile. So please, there a way we could like get the actual one now, the new updated ones?
Okay, synthetic goddess. So what I would do is, if you are I want to believe you're in my Telegram channel. If I am right, Lee, are you in my Telegram channel?
No, 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 no. I didn't see the link to that. I joined through Telegram, the Zoom meeting through our Telegram channel.
Okay, okay, you joined. So basically what I and synthetic goddess are going to do, she's going to send me a list of them. I'll post them. If you're on my Telegram channel, I'll post them on my Telegram channel, and she's also going to post it on her Telegram channel to make it easier and faster for us during the session. Hope that's fine.
Yes, thank you very much. I really appreciate that.
Thank you very, very much. So the next question is from Samson. Is Samson still on the call? He had his hands up, or has Lee asked your question too as well? Okay, so do we have okay, someone is asking, synthetic goddess, someone is asking, he says, how do you hack the synthetic lot size? Me, I had a way I used to hack it back then. I won't even lie. There was a way I used to, open a higher lot size with the small one I want to use, because some have fixed lot sizes. So if like the fixed lot size is like 0.1, and my account can't take 0.1, or I want to go lesser, I would open 0.15. Then I will quickly close 0.1 by modifying the position. So it was just
That,
a little trick for me.
that's just it. That's the way to hack lots.
Okay, so I guess that answers your question. That's one way you can hack the lot size thing too. But just know you're going to have to lose some amount of money in that process. Okay, Samson's hand is
All
up.
right. Thank you so much. My network was kind of misbehaving, so I have to find a good position. So thank you for this class this morning. Actually, I've been on Telegram since 4 a.m. going through messages. So I decided to hop in. So my question is, I think I made my first $100 from Signetics, trading Signetic V75 and V100. So does Signetic indices respect demand and support zone, like resistance and demand zone? And if they do, how do you go about that? Because I kind of trade the forex markets, and replicating the same strategy to the synthetic market has been very confusing. The aspect of you can't calculate the pips, or maybe having some challenges in your calculation, and also um because I tried making use of the same strategy to trade boom and crash, but it doesn't work. So I want to know, all the peers in synthetic indices, do they have a different strategy on how is being traded, and does they respect demand and supply zone?
Okay, so I will leave that question for Synthetic Goddess. Synthetic Goddess, please, can you help us answer that question? And please kindly check your WhatsApp. Thank you.
Okay. Basically, synthetic indices respect support and demand, but I don't know. Our support and demand might be different,
True,
honestly, because we have a
very
lot of people that teaches different support and demand.
true.
So I don't really know your own support. I don't really know your own demand. But personally, my own support and demand, it works in the markets. And also, you just need to, check the market and see all across the market and see how your own works. We have different people teach support and demand, or supply and demand, sorry. We have different people teach it. So I don't really know your own. I just know mine, but it works perfectly. And also for every asset, you can use one strategy for every asset. I use one strategy for all the assets that I trade. So you can use one strategy for every asset. Just get yourself, you just know what exactly you are doing in the market. Get to know the movement of each asset that you want to trade, and you are good to go.
Okay, thank you very much, Samson. I hope that answers your question. And let me just shed a little light. Okay, so when we are talking about we have roughly about 5 minutes left on this call. When we are talking about demand and supply, the truth about it is demand and supply sometimes can be very subjective. Now, it depends on the kind of demand and supply you're trading. We have people who trade institutional demand and supply. We have people who trade purely price action demand and supply. Like they use price action as a key point to identify demand and supply. Then we have people who also trade major and minor demands and supplies in the market. So when they are talking major and minor supply and demands, they are basically talking major supports and resistance levels. So it all depends on how you view your demand and your supply and what it is exactly to you based on the trading system in which you are using to trade. But yes, if you're talking about your smart money demand and supply, yes, they do work. In fact, they would work very well because of the fact that they are institutions, and you need to understand that since this is a broker generated market, it means that the institutions are responsible for the movement and traction of prices in the market. So definitely they would use an institutional method to layer in and out their orders and their supplies and demand. So yes, that would work. So guys, if you're still on this call, please check the chat section. Don't forget to follow and like on YouTube in case you want to come back to this video again on your you want to come back and watch this video again. The one thing that you need to do is to follow on my YouTube. Go to my YouTube, subscribe, turn on post notification. So in case you miss an episode and it gets posted, you're notified. It's back to back. You need to get this, like every week is something new for you to learn, and you don't want to miss that. So all you need to do is check the chat section of this Zoom right now. You see my Telegram link, and you'd also see the Telegram link for Synthetic Goddess. So you could go to our Telegram link if you're interested in trading VIX and you want to transition into trading VIX as well. I personally have a VIX channel, but that VIX channel has been unattended to for over a year plus, if not 2 years right now. So you want to do that, head over to Synthetic Goddess channel. I just dropped her link, so you can go there, follow her trade ideas, and learn to trade synthetic indices from her. And I'll always advise, as always, make sure that you learn first in everything you want to do. Learn first before you dive. I mean, sometimes you need to run before you walk, but even in running, you should have an idea of where you're running to, not just running aimlessly. Okay, so hit the links in the chat section now. Get in tune with my channel if you want to learn how I trade using fundamentals and build a sentiment around the market. This year is a highly fundamental year. You can see how the markets are moving crazy due to economic war threats, tariffs and all of those things. We can see companies and everybody, firing staffs, trying to increase workforces with AI. You need to understand how all of these things are going to affect the market. Remember, the market isn't just candlesticks. It is things that happens outside of the chart that influences the chart to move in the direction they move. And you want to key into that. You want to learn to implement sentiments around your trading in 2025. In fact, the whole of Trump's administration, you need to key in yourself to learn fundamental analysis properly and get to use them very well. Inflation is high in the world right now, not just in Nigeria. So you need to watch out for that. So go straight up to my YouTube, my Telegram link, and guess what? Most of these things are very much free access to you. You don't have to do too much to gain access to them. On that note, and on a more heavier note, I want to say a very, very big thank you to Synthetic Goddess. I wish I could speak Yoruba. I've always wanted to learn Yoruba, but I believe they say Esheo, Eshe Adupe, Adupe Go. Thank you so much for making our time to join TN Chats. Thank you for being with RionFx this Monday morning. Thank you for sharing so much insight, sharing your experiences and how well you've been able to grow. It's been an amazing 5 years. I think we have about similar time journey, and I believe there's more that we are going to do with coming years. And just to give a quick advice to each and everyone on this call, enjoy your journey. Take it slow. It takes time to get to wherever we are going to. It's not just about speed. It's about how well we get to where we're going to. So let's keep working hard. Let's keep doing our best. And I believe that God is definitely going to handle the rest. So thank each and every one of you for making Tea and Chats today an amazing episode once again, for making it beautiful, for staying here up until the end. And if you know you've been on this call and you've gained so much value, let me see some emojis, let me see some reactions in the chat section. Let us tell the world that we are making a movement a reality. And this is just the beginning of it. Thank you so much, Synthetic Goddess. We love you. We love you. We love you. So I'll see you guys next Monday, same time, same place. And if you are on my channel, we are going to head straight into the Outlook session by 1 p.m. So I'll see you guys. Take care and cheers. It's Ryan for a reason, baby.